Joining us now is Amanda Gotti, Chief Investment Officer at PNC Asset Management Group. Amanda, always nice to see you. We're seeing a real rip-your-face-off rally here in the pre-market. My question to you, is it justified?
I think we're moving a little bit too far and too fast. I would say hashtag not out of the woods yet. The market is definitely ready to claim victory in this inflationary battle. We're starting to see a couple of data points here consecutively build that we're making some progress, but I think at the end of the day, it's all going to come down to what the Fed says about the dot plot and the revisions for that following its meeting this week. I think that could be really the key to the path forward.
Amanda, for the layperson out there, they're waking up this morning and they still see inflation on the CPI up sizably year over year. I believe it was 7.1%. Is this rally we're seeing here, at least in the pre-market, just a reflection of the Fed maybe not going to raise rates as much as people thought in the first half of next year?
Well, I'm not sure that this gives the Fed any kind of an out per se. We still think the Fed's going to do 50 basis points tomorrow, and we still think that there's room for additional rate hikes in the first half of next year. With a 7 handle on headline and a 6 handle on core, it's hard to claim a lot of victory, right? This is not a satisfying place to be from an inflationary perspective. So the Fed's job is definitely not done here, but the market is using this as a signal for a Fed pause potentially sooner than maybe what we might otherwise expect.
Amanda, in your notes to us, you note that there's never been a scenario in which the Fed has raised its terminal rate to 4.6% and avoided a recession. Do you expect for us to, especially at a time where the dot plot is already showing 4.6% in the latest terminal rate, do you expect them to come out and issue anything tomorrow that signals it could go beyond that?
Oh, absolutely. I think Fed officials have definitely hinted that the dot plot is going higher from here. And so I think it's really a key question of how much higher. Market thinks they'll go to about 5. I still think that, basically is a foregone conclusion that it tips us into recession starting in the second quarter of next year. But I keep coming back to this idea that there's a perfect storm of macro headwinds that have really been in the driver's seat swirling all year long. And so it's not necessarily a foregone conclusion that the Fed has to go all the way there to the end state for the dot plot. If they get a reprieve from some of these perfect storm headwinds, perhaps we can stop short of that. And, perhaps today is also the first sign of some of the gale force winds of that perfect storm subsiding.
Hey, Amanda, it's Julie here. So if the storm is subsiding, we're starting to get the market pricing in an interest rate cut, maybe at the end of next year. Do you think that is actually likely to happen, or is the Fed more likely to just stop?
No, I think the market is assuming hastily that we're going to see Fed cuts in the second half of next year. I think there's about 50 basis points worth of cuts priced into the futures market. And so I would say that's way premature. We're describing Fed policy from here as longer for longer. And so to see an immediate pivot somewhere in the middle of the second half of next year seems just not in alignment with where the data and the trends are holding up today. I think a pause, though, signaling a pause or even just taking a pause is almost as powerful as a cut in the market's eye. So to the extent that we could signal where that end state for policy is, I think that can be an important driver of positive returns in the new year.
Well, enjoy today's rally. We'll leave it there. Amanda Gotti, PNC Asset Management Group Chief Investment Officer. Thanks so much. Appreciate it.